Juerg Kiener of Swiss Asia Capital now joining in. Juerg, morning. Thanks for joining us. First up, what have you made of this big correction that we had on crude? We had a $10 dip on a single day. Would you say it's a reversal of a trend, or was it just correction in an otherwise bull market?
I think if you look at the whole of last week, you start to see that the price mechanism change in the commodities market came out of the silver pit, and that was driven basically by 5 margin increases within the same week. So what we've been seeing is mass liquidation of people who were speculating, couldn't really afford the margin, and then some momentum traders were jumping the bandwagon on top of it. So for me, that's normally a washing out of weekends in a rising bull market, which is really showing the real structure of a bull market. So by end of the week, we've seen crude doing the same, basically coming back down almost to support level. Maybe there's a bit more to go, but I think 2/3 at least of whatever the correction would have meant to be has been done, basically.
Good morning. That clearly is the question. Where do you think crude prices are headed from here? What is your estimate that by the end of the year where crude prices will be, given the fact that the dollar continues to rebound, that we've seen the global economy slow down as well? What would be your estimate?
Look, I think we've got to start with your last question about the economic growth globally, and we know we have relatively weak growth. We know we have a debt problem. We know we're going to monetize, and as we're going to monetize, the strength of the dollar will not last for very long. And if it lasts a bit longer, it will be because one of the other 3 pillars, which is around the world, is weak too. So if you look at Japan or Europe, the situation is not much better. So we have these 3 big pillars which are all printing money and debasing the currency. So commodities as such will probably not fall very long versus the pool of growing money, and will rebound quite quickly. So if you look at the bottom side, maybe you're around 90 to 95 in crude, and your upside is going to go probably somewhere between 125 and 175 by end of the year.
All right, that's quite a scary scenario as far as India is concerned. Juerg, what about precious metals, gold and silver? We did see a big correction in silver. Gold is relatively resilient. Going forward, what's the kind of move that we're likely to see in these 2 metals?
If you look at silver, we had a huge catch-up versus gold, and touched 50. We had the liquidation, which came through the CFTC, which was basically aggressive intervening in the market, and investment bankers trying to shake out people. I think if you look at demand supply, we have very strong demand. We have no supply. We still have a market in backwardation. We have a paper market which is basically driven by the future exchanges, which is not really realistic to the spot market. If you want to buy a single ounce of silver, in general your price will be significantly higher, and you can look at anybody who's selling you silver rounds. So the market will recover quite quickly. Gold has probably done most of the move down at 1450. It's been quite a nice support, and we've taken 15 quite quickly on the way up again, and that's driven again by monetization. So we see very strong hands with Russia, China, India buying gold, and lately we start to see Latin American countries like Mexico adding 100 tons of gold to their balance sheet. So we're going to see very strong hands entering the market, and basically means price will continue to go up.
Coming back to that point you made about the dollar, the tide has turned in favor of the dollar, at least in the past 1 or 2 weeks. But like you pointed out, the dollar is actually far from handsome right now, given the fact where interest rates are, where the employment rate is for the US markets, etc. Do you think this is just a short-term rally that the dollar has seen, and it's on its way back down? Any kind of levels that you could throw at us?
Look, we have today about 500% debt, including all the social obligations versus GNP in the United States. We've got a zero interest rates policy in order to support that kind of leverage. And either you start basically attacking that imbalance and you're taking entitlements away and restructure your balance sheet, or you will continue to keep low interest rates at zero and subsidize everything through a weak dollar policy. So what I'm looking at is actually a bounce in the dollar. I don't think politically we see any changes. If you look at the Senate and Congress, we're trying to basically cut $40 billion in expenditures in an environment where my deficits are growing at the tune of $1.5 to $2 trillion. So it's nothing else than a joke and a small change on the derivative side of the market. For me, it's a dead story, the US, a dead currency, and it's going to need heart surgery basically. And until we start seeing that the politicians are serious about going for surgery, I don't really see anything which will help the dollar.
Juerg, one fundamental question then on the entire commodity basket. This ongoing correction which we are seeing right now, would this be a good buying opportunity, or you would say that we have seen peak of commodities as far as 2011 is concerned?
Look, the last time we've seen in silver a correction of 25% plus was in the 70s, which was about the mid-level before silver started to explode really to very high levels, and I think I see the same this time. So for me, in general, the setbacks, which are very sharp and heavy, are always great buying opportunities.
So if you had to prioritize for us in terms of buying opportunity within the metal space, what would you pick? What would be your top bet now? Because we've seen, that silver has been so volatile compared to gold. I mean, agreed that the rise for silver has been monstrous, but so has been the fall. From here on, if you had to prioritize for us in terms of 1, 2, 3 on your preferred picks in the commodity space, what would they be?
Look, I think your safety net, the easiest thing to store in high value quantities on the end will be gold and should be your foundation of your investment. Silver is a bit more speculative, but I think it will outperform quite significantly on the way up, because there's just very little inventories left, and strategic asset building in that space will take part. But we, like many other things, we are very keen in rare earths. We are keen and look at uranium space in this level. We think we have shortages in tin in the next 2 years, so we're looking at tin. And so the cheapest among all these metals actually are the companies producing these metals. They're on the lowest levels. If you look at M&A, what people are paying for the resources in the ground. And what I'm suggesting to people is actually they should start looking at investing into the corporate structure and not just the physical part. So you have physical gold as an investment, silver speculation, and you have to a large extent corporates which are creating your future cash flow.
Okay, just before we wind up, Juerg, just a word on your crude outlook as well. You said between $95 to $125 a barrel is the kind of range that you expect. For companies like us, our net import bill rises by almost $30 billion if crude moves from 90 to 120. So according to you, what is the most probable scenario for crude to touch by the end of the year?
Look, if you don't go through a massive financial collapse, then the market will be certainly higher end of the year, and I think 125 will be proven quite conservative.
All right. Juerg Kiener, thanks so much for joining us on the show with your thoughts. That's